Welcome back everyone to the Audacious Witch channel where we talk about the magic behind the stock market. Okay, picture this. I felt like I was running the universe. Like I could pause, rewind, skip commercials on my TV. It was the VCR era and I was living my best life. This one's for you, Dad. I was basically a tech witch. I remember my dad holding the TV remote. There are always great movies to watch after dinner. Remember when cable was a flex? Now we got streaming on like a million devices. We're basically TV gods. But like, who's paying for all this fire content? And with everyone having their own shows, we have a bajillion programs. Basically, everyone watches something, but nobody watches everything. The demand for programming is astronomical. Okay, so like old school TV was free because of ads, but I always get up and do something else. Now we pay for no ads on streaming, but it's getting expensive. Basically, to avoid ads, we gotta pay a fortune. It's kind of messed up. Cutting content. Nah, that's not it. So we're stuck with ads online. Trade Desk is supposed to be the solution. They had a rough quarter, but let's get into it. TTD is the king of independent ad platforms. By now, digital advertising is ancient. It started as small typical banner ads on websites. Then the ads got bigger and more annoying. Many users revolted. Pop-up and ad blockers came into use. Video ads are the next step up. They too can be irritating, and many like me look for the skip link that quickly appears. I refuse to watch more than the mandatory 5 seconds of a YouTube ad. Advertisers can reasonably target those to whom the ad should be shown to, and they could make the ads clickable. That helps them measure how productive the ads really are. Digital advertising is here to stay. They just need to get more audience friendly and give better returns on advertiser investment. It can be the supply side or demand side. Supply side platforms, SSPs, work for those who sell ad inventory like Facebook web pages, YouTube videos, which somebody can advertise on. The platforms typically receive, analyze, and eventually accept bids placed by competing advertisers for a particular spot. DoubleClick was a big name here in the early internet era. Google acquired it in 2007. After various reorganizations and rebrandings, it became Google Ad Manager in 2018. Demand-side platforms, DSPs, on the other hand, represent the advertisers, not the publishers, meaning not the websites. An advertiser isn't limited to advertising in any particular place. It can spread its ads around all kinds of venues. It doesn't do this willy-nilly. These campaigns are carefully planned. They balance costs, bids that stand a good chance of winning, with characteristics, locations, demographics, interests, etc., of people who are potentially good prospects for buying the advertiser's goods or services. Often nowadays, much of this is automated. We call that programmatic advertising. The Trade Desk is the independent king of programmatic advertising. An independent platform is unbiased. It doesn't own nor need to sell any of its own ad inventory. It'll place ads anywhere that work for the advertiser. It cares only about price, targeting. Google, Meta, and Amazon operate walled garden platforms. They want users to advertise on company-owned properties. So what does Trade Desk actually do? Suppose you just created the world's greatest new sneaker. You're selling through Amazon.com. But you don't want to wait around for potential customers to run into it. Eventually, they will. But Amazon has lots of products. You want to help nudge your offering up the prominence chain. Amazon has a digital ad placement platform, so you could use it to buy advertising on the site. That will help. But that's a walled garden platform, so you might not effectively reach those who rarely go on Amazon. Your prospects may spend more time on ESPN.com, NBA.com, or any one of these countless other websites dedicated to track and field, fitness, fashion footwear. Why not? Your sneakers look cool. So you turn to an independent DSP that serves you, a buy-side DSP. Using TTD's platform, you place ads in places wherever you think potential customers are most likely to see them. How about a commercial advertising your sneakers on programs like that? I'm not talking about your dad's idea of TV. I'm talking about connected TV. That's a fancy name for internet TV or streaming. Today, TVs are being built to go online. If you don't have one of them, you can get a little stick device that connects you to Roku TV, Fire TV, or Apple TV. By the way, you don't need a TV in the traditional sense of the word. You can also get CTV through a tablet, a phone, a laptop, or a desktop. So CTV is big and it's getting bigger. TTD places the majority of its ads on CTV. Guggenheim Securities pegged TTD's likely share of CTV advertising at about 59% for 2024. The firm expects it to reach 63% in 2025 and 66% in 2026. But make no mistake about it, TTD won't become CTV only. It places ads all over the internet. We're talking about a huge playing field here. TTD today does most of its business in the US, but this is a global field. The market opportunity is still there. The Trade Desk market share, $12 billion, remains relatively small within the $1 trillion market. With the industry's CAGR nearing 15%, so long as the Trade Desk maintains their leadership position, it's difficult to see them merely match the industry's growth. Why TTD is good at what it does: targeting, data, keeping advertiser clients informed, and making advertising more palatable to consumers. Getting your sneakers before the right audience is easier said than done. Targeting correctly is hard. I still see more ads by sellers of investment recommendation services on the Instagram account I used for nonsense, like following trash TV celebs. I get fewer ads on my main business account. Go figure. The huge hissy fit Wall Street threw in response to the latest quarterly update gave us great opportunities to get the shares for cheaper prices. The fact remains that TTD is and remains fundamentally strong. I also see TTD as changing the world type of company, based on the strong cash position and profitable business model. I believe it will survive through any recession, financial crisis, or even depression. However, the Trade Desk numbers could be particularly vulnerable to economic downturns. Historically, marketing is one of the first expenses to be cut by companies in trying times. Given the rumors of impending economic troubles, I think we could get better prices for our future shares.